Hey guys, Stock Saturday, and it's been another silly week, I would call it. Up about 13.3%, 148,000, which is ridiculous. But yeah, largely down to the crypto miners again, which I have been selling, which I'll come back to. But yes, comparing to the S&P, it's up 0.81%, so another new high, I believe. Did get to 6693 on Monday, and then just sort of hit a new high on Friday. And the Nasdaq was down on Friday, but did hit a new high. And 0.64% for the last week, so slightly less than the S&P. I have had some other gainers in here, to be fair. TSMC sort of pushing new highs, very nice. Applied Materials coming back quite strongly. But one or two sort of new buys. Next Era Energy and EQT Corporation. I sort of wanted to get a little bit of energy exposure, and the sort of big oil boys I was having a look at, ExxonMobil and Chevron and people like that. Sort of, they're quite a significant amount higher valuation than your sort of Shells and BPs. I did look at Shell and BP, sort of thinking, all of these oil companies, US and UK, pay a lot of dividends, and I wouldn't have withholding tax from the UK ones. But the UK sort of raised their windfall tax on the UK energy companies, and they just sort of seem generally unhappy with energy companies in general because they're making still quite a lot of money. So I don't really like having the government against me. Where the US sort of don't have that problem. If anything, they're very supportive. But just sort of thought I would go for a more natural gas focused play, because natural gas is sort of seen as a little bit greener than oil, and sort of the net zero claim or net zero targets do seem to have somewhat been put on pause / thrown out the window with the AI demand. So we need energy as soon as possible, and natural gas sort of seems to be one of the key ways they're going to go for it. Sort of nuclear in the long term, and a bit of renewables. So in a similar vein, Next Era Energy was a sort of large renewable bet. And they also have quite a bit of natural gas as well. Not the cheapest valuation, but I'm sort of, mindful that I'm getting out of crypto, which is extremely high risk, into what is maybe, a little bit on the high valuation stocks. So probably just got to accept that I could be buying at a relatively high point, and sort of might have to average down on some of these, or just accept dividends for a few years, and maybe sort of a drop in the next few years, and recovery, within sort of 5 years or something. So looking at a bit of news, we had the Bitcoin miners start reporting, as it's the 3rd yesterday, and CleanSpark came out of the gate pretty much straight away with 629 Bitcoin produced, which is a somewhat disappointing number. It's way down from the sort of low 700s that they were at before. I think this is just difficulty rising, because they've stayed at 50 exahash operational, average of 45.6 for the month. So I think that is shutting off in at some times, and 16.07 joules per terahash efficiency. So they are very, very efficient, but continuing to sort of sell and reduce Bitcoin produced because of that difficulty rise. So I'm not all that keen, hence I have been selling. I sold a little bit of CleanSpark in the portfolio, and selling quite a bit of the others, which I will come back to, I suppose. They sold 444 out of their 629 for the month, so they now hold 13,000, but they are starting to borrow against it basically and fund their sort of operations with that rather than share dilution. But it does kind of mean that there isn't really a full 13,000 on the balance sheet because they owe debt on that. Obviously, Bitcoin goes up, then the debt doesn't go up. So there is that. But yeah, especially with CleanSpark only having 1 gigawatt under contract and being basically all in on Bitcoin, I'm sort of less keen on CleanSpark. They did take some convertible notes and they're sort of doing some of this Bitcoin borrowing to potentially pivot into HPC AI, which I think is possibly a little bit late to the party. So, if they're sort of not even buying GPUs or sort of converting their facilities yet, with other companies signing deals at the moment, CleanSpark in theory could be getting the sort of the worst of the deals unless sort of demand really, really picks up, and it'll be better when they come to sign. But I'm not really wanting to take that risk. So we had riots as well, and this was quite disappointing. 477 Bitcoin produced in August, down to 445. Again, due to the difficulty increase, although they did increase average operating hash rate and deployed by 0.1 exahash. So they really are sort of not moving at all. They actually sold 465. So they sold 20 more than they produced, takes their total down slightly, which isn't ideal. And the power credits have been pretty much completely dried up, which was quite a surprise because I thought September was a fairly sort of warm month. They didn't get that much last year in September, to be fair. But yeah, 1.4 million means they're all-in power cost 4.2 cents, as opposed to the sort of exceptionally low 2.6 last month. 20.5 fleet efficiency is sort of improving slightly, but not even being under 20. Sort of Hive are at I think 18 now, sort of 18 and a half. So yeah, Hive were always the high cost miner, and they sort of overtook Riot now, basically sitting on Riot just because of the 1 gigawatt or whatever they have, 1.6 gigawatt on Corsicana to potentially sell for AI. And a lot of people still saying, well, they have 19,000 Bitcoin, but they have a lot of convertible debt against that as well, so there's dilution there. And yeah, they're just, I think, getting sort of a little bit expensive, like 7.5 billion market cap now for not a lot of Bitcoin produced, and I don't really value the Bitcoin held sort of all that much. I would give it like 1 times the value of it as opposed to sort of the treasury companies and MicroStrategy and people like that. And the AI side really doesn't seem to be coming. They keep sort of saying we're analysing things, and no sort of hints even of a deal yet. Maybe they'll suddenly come out with one, but yeah, I have been selling. So just a quick check-in on KGHM's production numbers. This is for August, so yeah, we just finished September, and they're reporting August numbers, but yeah, it's sort of more up-to-date than you get from most miners, I would say. So yeah, copper sort of looking up in price, at least at the moment. It's good to see their sort of production keeping on pace. 62,500 tonnes, slightly down from August last year, and the sort of yearly totals are slightly down, but still pretty good numbers. And silver, they had some maintenance last year, so it's up hugely from then. 120 tonnes, and yeah, 908 on the annual compared to 868, so should be on track for sort of around about 43 million ounces of silver, and silver at touching $48, $47. That is very, very nice. And oh yeah, total precious metals, just the remainder, basically a bit of gold, bit of platinum and everything. 13,000 ounces. It's not a lot compared to their market cap. Quite a bit of molybdenum as well, £3.5 million, I believe that is, compared to 1.7 last year. So yeah, over double. That's quite good. So some of you may noticed some of my recent buys haven't exactly been in line with sort of my watch list that I showed before. Obviously, this was a watch list rather than a buy list. Sort of assess them when the time came, and yeah, sort of looking at them, a lot of these I wasn't all that keen on buying. Sort of the real estate and REIT side. I used to hold people like Taylor Wimpey and Barrett. Not all that keen to be buying anything, sort of tied to the UK economy at the moment. So things are sort of looking a little bit rough. So yeah, I was kind of leaving those alone. Similarly with the sort of UK REITs, Tritax, Big Box and Eurobox. And yeah, some of the other sort of US REITs, the big obvious ones like Realty Income. Wasn't all that keen on, doesn't seem to be growing, and I've always sort of not really been that impressed with their top clients, top tenants really, sort of seem like disruptable businesses. So yeah, I don't see them as the value that everyone else does. Digital Realty have obviously rocketed up on the data center demand, so I don't really want to be sort of buying that at the highs. American Tower and Vici, obviously two of my holdings. I have been increasing, still pretty happy with them. Assura, Primary and Impact are all UK focused, so kind of want to ignore them at the moment. And yeah, so it leaves me with sort of some of the US that I don't. So I have got Prologis and Alexandria, the new additions. And sort of Stag, they look okay. I just sort of haven't gone with them, and I went with Prologis instead. Sort of bigger, I think more solid company at not much more of a valuation. And yeah, Lennar, not really wanting to go for US house builders. I sort of prefer the REITs. So in the industrial side, this is sort of an area I'm keen on, and I've been sort of adding some more stocks to the watch list. Certainly, I think 3M I sort of leave there and I'm unlikely to buy. They just seem all over the place. VW, I'm sort of not really keen on any of the car makers, sort of certainly legacy car makers anymore, especially with China sort of cars doing really well. I'm considering BYD. Sort of watching them as there seems a bit of turmoil with them at the moment, but I think they can come out of this. Caterpillar has just sort of been rocketing up ever since I've been looking at it and sort of haven't got in, but I think I will continue to watch. Deere & Co and AGCO, sort of farming machinery companies, I'm sort of keen on keeping an eye on still. They're sort of a little bit high valuation, but sort of goes hand in hand with my foodie agriculture type stocks. FedEx, I can't imagine I'll be buying anytime soon. Stellantis, I've obviously sold off and can't really see me getting back into them. Again, sort of Chinese demand just looks quite bad for them. BASF, sort of chemicals company, just keeping them on the watch list really. Applied, obviously quite a big holding. And then AB, I think they are actually spinning their sort of robotic side off from the sort of general industrial side. So I've sort of been buying AB, but not entirely sure what's going to happen, whether there is a spin-off or not. Honeywell, quite interestingly, have a sort of automation side of their business and are sort of considering spinning that off. So I didn't really want to buy Honeywell as it is. They sort of have consumer stuff and defense stuff and all sorts really. I didn't want all of that, so I'll certainly assess the automation spin-off if it does happen. Energy, as I say, sort of was looking at Shell, decided not to go with it. BT, sort of as an infrastructure bet, not really interested in. Siemens, I've been looking at Siemens, sort of the parent company, and Siemens Energy, but both sort of seem they've sort of rocketed up hundreds of percent. I think certainly Siemens Energy, and yeah, I think that was sort of enormous demand for turbines and all sorts of things. So yeah, keep an eye on, I suppose, but I didn't really want to buy it up 300% or something. Louis Vuitton, I am sort of keeping an eye on. I thought it was okay value and sort of was maybe going to buy on a bit more of a dip, but it's sort of gone up, 10% or so. Food and drink, I sort of always had, the big US players, your sort of Pepsi's, Coca-Cola and all of that. I think people focus a little bit too much on the dividend and not on total return with some of these. They're sort of not actually performing that well, not particularly growing, and just left sort of most of those alone. And they are obviously, sugary, not particularly healthy food. So I tended to prefer to go for more staples on a sort of bearish view of the world. I suppose we're going to need, the staples regardless. Sort of beans and grains and pulses, nuts and all sorts. And they use them for derivatives of that, pastes and spreads and things. So yeah, preferring that side of things. Archer Daniels Midland, sort of one of my older holdings I haven't got back into. And Kroger, not really interested in supermarkets, to be honest. So yeah, kind of got these as my food and drink bets. Financials, I have got BlackRock, CME and Euronext. It's pretty much as intended. I haven't gone with Visa at the moment. They sort of never quite seem that good value, and do have, maybe I'm crazy, but the potential of sort of crypto and stable coins possibly eating into their business, where I can't really see it happening with the others. Visa obviously charging people sort of 4% or whatever it is, 3% on credit cards where they don't really need to, and stablecoins potentially, sort of various crypto companies could get around this. So yeah, haven't gone with Visa. I did have Johnson and Johnson as a sort of broad, pharmaceutical bet. I'm not interested at all in getting into Pfizer and people like that. Just don't really know anything about the industry and wouldn't be able to analyze it. I know I can't analyze some of the others, sort of, applied materials and things. I'm not a technical person in that way, but pharmaceutical, I just feel like I'm even more out of my depth. It's patents and drug pipelines and things. So yeah, I did have Johnson and Johnson as a sort of, a little bit more of a dumb bet on that, but yeah, haven't been interested. Consumer staples, sort of similarly, you always sort of think maybe I should have a bit of ballast of consumer staples, but just the more you look at them, they just seem expensive for no reason really. Sort of 25 PE, whatever Procter and Gamble are these days, for no growth at all really. Not quite sure why you're paying it. I think people just pay thinking that they're safety, and then you're paying, I would say, overpaying. The mining side is obviously a little bit all over the place with me at the moment. I don't have Vale, Glencore or Rio Tinto because I'm sort of less interested in iron ore these days and more sort of copper focused. So I sort of just have KGHM really, and then all the sort of precious metals sides. But interested to possibly expand the mining side. Quite interested in Disney and potentially Hasbro still. They sort of both had a reasonable run up, and sort of haven't, there's been other stuff that I wanted to buy first, to be honest, but I would potentially consider buying those even at a slightly higher point. Defence, sort of, I'm not buying Rolls-Royce, to be honest, on the basis of sort of nuclear reactors and things. Rolls-Royce was always just an interesting defensive aerospace bet, but yeah, I'm not interested in sort of paying the astronomical valuation they are at the moment. Just keep rocketing up, on the sort of potential future of small modular reactors and things. That's not for me. Boeing and Airbus, sort of, I'm never really that keen. Sort of whole world wants us to stop flying quite so much. They do have their defence side, but I think if I was going to go for a defence, I would go more defence than aerospace, consumer aerospace flying and things. So it would be a sort of Lockheed or Raytheon or something like that. But they don't seem all that good value at the moment. And then my technology side, so I've got one or two of these, obviously Samsung, TSMC, and Broadcom. Nintendo just seem astronomically priced at the moment because of their Switch 2 release. Not really interested at that sort of price. Intel, similarly, have sort of rocketed up just because the government and Nvidia are buying in, it seems. There is partnerships and potential revenue from that, but it doesn't improve their sort of foundry side. And I would still say being behind TSMC on production. So yeah, not interested in them at that sort of price. eBay, I suppose, don't really count as technology all that much. That was just an interesting sort of value bet. Oracle have absolutely rocketed. I wouldn't be sort of buying them there. Maybe should have bought it a while ago. Chinese tech, I sort of would really leave alone at these prices. They've been, rising quite a lot, and I don't trust paying relatively high valuation for China. So sort of Baidu out as well. I listened to a podcast on Sony as a sort of really interesting, bet on the sort of PS5 and subscriptions and things doing well. Better than sort of people just buying a PS5 outright and buying a few games. And whether it is the sort of PlayStation revenue dominating that, I'm not sure, but that theory seems to be playing out at the moment without me getting into it. So I'll leave it alone for now. But yeah, happy with my sort of technology. I don't have Amazon here actually, and I have bought into Amazon. Always keeping an eye on the other big tech, but yeah, at the moment, Amazon was the only one that interested me. So yeah, as I say, this was always a watch list. I have bought quite a few of them and sort of swapped some for some new ones, but we'll continue to monitor it. So as I say, portfolio-wise, have been selling off quite a bit. CleanSpark sort of sold, I think about 400 shares. Will probably continue to do so as if Bitcoin is rising and CleanSpark rising sort of 2x with it. Equinox and Fresnillo sort of looking pretty good. Surprised they haven't sort of risen more at the sky high gold prices at the moment. They've sort of been flat for about a week. Iron, I sold off. I think I had 800 shares down to 600 now. $50 is just a hell of a lot. There's people saying it can go to $100, $300. I saw somebody say. I think this is somebody pointed out on Discord. I think it was Couch Investor, not wanting to sort of slag off other creators, but said Iron could be a 50x from here. I was buying it sort of at $7 on the potential they had, but yeah, 50x from here would put them at sort of $700 billion or something. I think that's just needs to wake up a little bit. Maybe I'll be wrong, but they have 2.9 gigawatts of power. There's people with massively more than that, could easily sort of pivot into AI. Yeah, I just can't see that. That's just people getting excited off the amount that it's gone up already. They project the past into the future and get far too carried away. So I've been selling Iron, quite happy with that. Riot, sort of even more happy to sell, as I said, reviewing their numbers. I'm sort of holding on to Iron a little bit more because there's potential AI deals or them sort of doing it themselves. They have the money to do it themselves, where Riot sort of do not seem interested at all. They're just leaving the land there and sort of potentially negotiating with people. But yeah, certainly selling Riot at the moment. Bought more Amazon. That's up to sort of nearly £15,000 now. Sort of happy to keep buying, and mindful of sort of percentage of what the total portfolio it will be. You know, Amazon sort of starts to rise to like 2%, 3% or something, then yeah, I might start to sort of think that's quite a lot. I'm starting to think about percentage of the sort of and I probably will do another tab sort of on the spreadsheet for the sort of non-crypto and gold portfolio, basically, and sort of percentage weights that I want all of my post crypto and gold portfolio to be at. I think I need to start doing that. Hive, I don't think I did sell any, but sort of am keen to be at some point. Don't think that they can sort of rocket up to what I originally thought they were going to, sort of $10, $15, $20. I think, yeah, Bitcoin difficulty is just going to knock that on the head. I think I bought a little bit more Samsung and added 50% to my REIT positions this week, so that was quite strong. I'm sort of, if these get to 10,000 each, that would be about 4% of the sort of total portfolio in REITs. So yeah, I think that's possibly a little bit low, really. So kind of happy to keep adding to these. Price sort of isn't really moving all that much. And yeah, Sylvania is actually at the bottom now, but they're doing quite well. Looking at the interactive brokers side, this is sort of increasing quite a bit now. KGHM rocketing up to 171, finally getting a little bit of love. And yeah, Pan American sort of doing okay, I suppose. Hive, sort of the shares that I bought with my dividends on Hive, doing quite well here. And on the option side, obviously things are looking rather marvellous. Pretty much everything in the green now, apart from the little treasury company bet that I made. Even CleanSpark, 55% in the green now, 54%. And Iron, an average of 90x, which is a little bit crazy. So I have been selling more. I think I was at 120 contracts last week, so I've sold another 20. We'll continue to do so. These are sort of January contracts, so three and a bit months left. Don't want to be sort of holding. Well, it wouldn't be bag holding. If these sort of drop into the end of the year potentially, that would just be sort of going to next to nothing, because you can't hold them past January as you can with the ordinary stock. So I am more keen to be selling the contracts than the stock itself, sort of in the ISA. But we'll see. Hive, I sort of sold a very small amount, but I'm keen to sort of let those run a little bit and then be selling, I think. Equinox and Kur just sort of doing quite well. Haven't been doing anything with them. Sort of considering selling a little bit more Kur, but didn't pull the trigger. B2 Gold sort of just pushing on ever so slightly. About 1,000 up this week, I think. Riot, I did sell quite a lot. Can't remember what I was at last week. Sort of 160, 170 contracts. Now at 105. Sort of as reasons laid out. Cypher has sort of had a pretty good week. I think they got to sort of 15 and a half. And I didn't sort of take the opportunity, but sort of will be potentially. Himax sort of barely moved, and yeah, CleanSpark sort of in the green now. This is November $20 contracts, so yeah, about 6 weeks to go really, and they're at 15. So I might be just considering taking the gain on that. These were sort of a poor buy. They've been in the red pretty much since I bought them. So yeah, take a 50% gain maybe, and not risk the next 6 weeks. and yeah, quite a lot of cash. So probably be withdrawing. I don't really want to buy all that much in terms of options at the moment. I'm sort of mindful that I don't want to be overly allocated to Trading212, so sort of considering maybe just buying some ordinary stocks or ETFs in interactive brokers and sort of running the two rather than sort of withdrawing this and putting it into Trading212. So I'll have a think. I need to start weighing up tax and where the portfolio is going to be. As I say, post crypto and gold, because at some point, hopefully, it's not going to dominate the portfolio. So, yeah, very interesting times. Leave your thoughts in comments below, how you guys are getting on in these odd times, and like and subscribe. See you soon.